Hey everyone, welcome back to Boni's Life. I'm your host Boni, and if you're watching this on June 3rd, 2025, then you're probably wondering what the heck is happening in the crypto markets right now. And honestly, after spending the last 48 hours diving deep into the data, talking to analysts, and yes, probably consuming way too much caffeine, I can tell you that we're living through some absolutely fascinating times in the cryptocurrency space. Before we dive into today's analysis, make sure you hit that subscribe button and ring the notification bell because the crypto market has been moving faster than my attempts to explain blockchain to my grandmother. And trust me, that's saying something. Also, if you find today's analysis helpful, give this video a thumbs up. It really helps the YouTube algorithm understand that people want quality crypto content, not just another video of someone screaming about the next moonshot coin. So let's talk about what's been happening over the past 3 days with a laser focus on the last 24 hours because frankly, the markets have been more volatile than my mood when I check my portfolio at 3 a.m. As I'm recording this, Bitcoin is sitting at around $105,600, which is up about 1.1% from yesterday. Now, that might not sound like much, but when you're talking about Bitcoin at these levels, every percentage point represents billions of dollars in market movement. Ethereum is actually the star performer today, up 4.5% to $2,626. And before you ask, yes, I did double check those numbers because Ethereum leading the charge while Bitcoin consolidates is not something we see every day. It's like watching the quiet kid in class suddenly become the most popular student. There's usually a good reason for it, and we're going to explore exactly what that reason is. But here's what's really interesting about today's market action. We're not just seeing random price movements. We're seeing the crypto market respond to some major global events that have been unfolding over the past 72 hours. And when I say major, I mean the kind of events that make central bankers nervous and crypto traders either very happy or very sad, depending on which side of the trade they're on. The biggest story, and I cannot stress this enough, is the extension of the US tariff pause on Chinese goods. Now, I know what you're thinking. Boni, why are you talking about trade policy on a crypto channel? Well, my friends, because everything is connected in today's global financial system. When the US government announced on June 2nd that they're extending the tariff pause until August 31st, 2025, Bitcoin jumped from around $103,000 to above $105,000 faster than you can say correlation is not causation. This isn't just coincidence. We've seen this pattern before. Back in April, when the Trump administration announced a 90-day tariff pause, Bitcoin surged from $74,500 to over $82,000. The market clearly views reduced trade tensions as a positive catalyst for risk assets, and Bitcoin, despite what the maximalist might tell you, is still very much a risk asset in the eyes of institutional investors. Now, let's talk about the Federal Reserve situation because this is where things get really interesting from a fundamental analysis perspective. The CME FedWatch tool is showing only a 4.6% probability of a rate cut in June, which is down dramatically from May's 66.7%. That's not a typo, folks. We went from a 2/3 probability to less than 5% in just 1 month. That's the kind of shift that makes traders recalibrate their entire strategy. The reason for this dramatic shift is pretty straightforward when you look at the economic data. Core PCE inflation, which is the Fed's preferred measure, dipped to 2.6% in March, but economists are now projecting a Q2 average of 2.9%. Meanwhile, we had a Q1 GDP contraction of negative 0.3%, but unemployment is still sitting at a relatively low 4.2%. It's the kind of mixed economic picture that makes Federal Reserve officials reach for the aspirin bottle. Fed Chair Powell has been pretty clear about taking a wait-and-see approach, and honestly, can you blame him? The guy is trying to navigate between the Scylla of inflation and the Charybdis of recession, all while dealing with geopolitical tensions that change faster than TikTok trends. The critical catalyst everyone's watching is the May inflation report that was due June 1st. If core PCE comes in above 2.8%, the Fed is almost certainly going to hold rates steady. If it comes in below 2.7%, we might see those rate cut expectations come roaring back. And here's why this matters so much for crypto. Bitcoin has historically had about a 0.75 correlation with the S&P 500 over 30-day periods. When the Fed cuts rates, it reduces the opportunity cost of holding non-yielding assets like Bitcoin and Ethereum. Plus, a weaker dollar, which often follows rate cuts, tends to be positive for Bitcoin since it's priced in dollars globally. But let's zoom out for a second and talk about what's been happening in the crypto space specifically over the past 3 days. The Ethereum surge we're seeing today isn't happening in a vacuum. The Ethereum Foundation announced a major restructuring of their staffing to focus on protocol developments in what they are calling a competitive and crowded network landscape. Translation: they're doubling down on making Ethereum faster, cheaper, and more efficient to compete with all those layer 1 alternatives that have been eating their lunch. This kind of fundamental development is exactly what smart money looks for. While retail investors are often focused on price action and technical analysis, institutional investors are paying attention to things like development activity, network upgrades, and ecosystem growth. The fact that Ethereum is up 4.5% while Bitcoin is only up 1% suggests that the market is pricing in the potential positive impact of this restructuring. Now, let's talk about some of the technical analysis, because I know many of you are chart watchers. Bitcoin is currently testing what analysts are calling critical support at $103,500. This level was established during the May rally and has held up pretty well so far. But here's the thing about support levels in crypto. They work until they don't. If we see a breakdown below this level, the next major support zone is in the $100,000 to $95,000 range. On the upside, Bitcoin is facing resistance from the 20-day exponential moving average. For those of you who aren't familiar with technical analysis, think of moving averages as dynamic support and resistance levels that change based on recent price action. The fact that Bitcoin is struggling to break above this level suggests that the bulls don't have complete control of the market right now. The really interesting technical development is what's happening with market sentiment indicators. The Bitcoin long-short ratio has dropped from 1.0141 to 0.9399 over the past 24 hours. What this means is that more traders are betting on Bitcoin going down than going up, which is a pretty significant shift from the optimism we saw just a day ago. But here's where it gets really fascinating from an on-chain analysis perspective. We're seeing a significant amount of dormant Bitcoin, coins that haven't moved for 1 to 2 years, suddenly becoming active. In traditional markets, this kind of behavior is often viewed as a bearish signal because it suggests that long-term holders might be preparing to sell. However, in crypto, the interpretation can be more nuanced. Sometimes these movements represent institutional rebalancing or the movement of coins to new custody solutions. Speaking of institutional activity, let's talk about what the big players are saying. Kathy Wood from ARK Invest has updated her Bitcoin price target to $3.8 million by 2030. Now, before you start planning your retirement based on that number, remember that Kathy Wood is famous for her incredibly bullish predictions. ARK Invest has also increased their more conservative target to $2.4 million by 2030, which is still, let's be honest, pretty aggressive. Michael Saylor's MicroStrategy continues to be one of the most interesting corporate Bitcoin stories. They're expecting Bitcoin to soar beyond $13 million by 2030, and they're putting their money where their mouth is. Just yesterday, Strategy announced an IPO of 2.5 million STRD shares, which many analysts interpret as a way to raise more capital for Bitcoin purchases. But let's balance this with some more conservative institutional views. JP Morgan analysts have been focusing on Bitcoin mining profitability, reporting improved conditions in May 2025. They noted a 19% growth in miner market value, which is actually a pretty important fundamental indicator. When mining is profitable, it suggests that the network is healthy and that there's strong demand for Bitcoin transactions. Now, I want to talk about something that I think is being underappreciated by a lot of crypto commentators: the regulatory environment. We've seen some absolutely massive shifts in the regulatory landscape over the past week that could have long-term implications for the entire crypto industry. The SEC formally dropped its lawsuit against Binance and Changpeng Zhao on May 29th, which was one of the last major crypto enforcement actions by the agency. This isn't just about Binance, it's a signal that the regulatory approach to crypto is fundamentally changing. The SEC also published a staff statement saying that staking activities do not violate securities laws, which removes a major cloud of uncertainty that's been hanging over the DeFi space. But the really big news is the executive order that was signed in March 2025 to establish a U.S. strategic Bitcoin reserve. Think about what this means for a second. The world's largest economy is now officially viewing Bitcoin as a strategic asset, similar to gold or oil. This isn't just symbolic, it's a fundamental shift in how governments think about cryptocurrency. The Trump administration has been doubling down on their pro-crypto agenda. Vice President J.D. Vance spoke at the Bitcoin 2025 conference and vowed to fire everybody like Gary Gensler, which got a pretty enthusiastic response from the crypto community. Whether you agree with the politics or not, this kind of regulatory clarity is generally positive for institutional adoption. We're also seeing movement on the ETF front. With a more crypto-friendly SEC, analysts are saying that the spot XRP ETF approval is much more likely in 2025. There's even talk about staking ETFs being approved by late 2025, which would be absolutely huge for the DeFi ecosystem. Let me share some data that I think really puts the current market situation in perspective. Exchange reserves have been declining at what analysts are calling alarming rates. Currently, there are about 2.4 million Bitcoin sitting on exchanges, compared to 3.1 million Bitcoin a year ago. This is generally viewed as a bullish signal because it suggests that people are moving their Bitcoin off exchanges for long-term storage. But here's the nuance that a lot of people miss. Not all exchange outflows are created equal. Some of this movement represents institutional custody solutions. Some represents retail investors moving to hardware wallets, and some might represent preparation for selling. The key is to look at the broader context, which in this case suggests institutional accumulation. Global liquidity is another factor that's not getting enough attention. Historical trends show that as global M2 money supply increases, Bitcoin often experiences dramatic price surges. After a prolonged period of stagnation, global liquidity is beginning to rise again, which could create the perfect environment for another major Bitcoin rally. Now, let's talk about what all this means for different types of crypto investors. If you're a short-term trader, the key levels to watch are that $103,500 support level for Bitcoin and the $2,600 level for Ethereum. A break below Bitcoin support could trigger a move toward $100,000, while a break above the 20-day EMA could target $120,000. For medium-term investors, the Fed's decision timeline is crucial. We've got the May inflation data, then CPI data on June 11th, FOMC minutes on June 17th, and the actual Fed meeting on June 18th. Each of these events could significantly impact crypto prices, especially if they change rate cut expectations. Long-term investors should be focusing on the fundamental developments we've discussed: regulatory clarity, institutional adoption, network development, and macroeconomic trends. The establishment of a U.S. strategic Bitcoin reserve, the SEC's more favorable stance, and continued institutional accumulation all point to a maturing market that's becoming more integrated with traditional finance. But let's also talk about the risks, because I'd be doing you a disservice if I only focused on the positive factors. The shift in market sentiment over the past 24 hours is real, and it's something to take seriously. When the long-short ratio flips from bullish to bearish that quickly, it often signals that momentum is stalling. The geopolitical situation, while currently favorable due to the tariff pause, could change rapidly. The July 8th deadline for major trade deals is approaching, and if negotiations break down, we could see a return to trade tensions that would negatively impact risk assets, including crypto. There's also the question of what happens if the Fed remains hawkish longer than expected. If inflation doesn't cool as quickly as hoped, we could see interest rates stay elevated for an extended period, which would be challenging for all risk assets. From a technical perspective, the fact that Bitcoin is struggling with the 20-day EMA while showing signs of momentum loss is concerning for bulls. If we see a breakdown below current support levels, it could trigger algorithmic selling that pushes prices lower faster than fundamental analysis would suggest. Let me give you my assessment of the most likely scenarios over the next few weeks. I'd assign about a 40% probability to a bullish scenario where we see Fed rate cuts combined with successful trade negotiations. In this case, Bitcoin could target $120,000 to $130,000, with Ethereum potentially reaching $3,100 to $3,500. The base case, which I'd give about a 45% probability, is continued consolidation. Bitcoin trading between $95,000 and $115,000, with Ethereum between $2,400 and $2,800. This would represent a healthy consolidation after the strong rally we saw in May. The bearish scenario, which I'd assign about a 15% probability, would involve the Fed remaining hawkish combined with escalating trade tensions. In this case, Bitcoin could test support in the $85,000 to $95,000 range, with Ethereum potentially dropping to $2,000 to $2,200. Now, I want to address something that I've been seeing in the comments and on crypto Twitter. A lot of people are asking whether this is the right time to buy, sell, or hold. And honestly, that's a question that only you can answer based on your individual financial situation, risk tolerance, and investment timeline. What I can tell you is that the crypto market is maturing rapidly. We're seeing institutional adoption, regulatory clarity, and integration with traditional financial systems at a pace that would have been unimaginable just a few years ago. At the same time, crypto remains a volatile and speculative asset class that can experience dramatic price swings based on factors that have nothing to do with fundamental value. If you're new to crypto, please don't invest more than you can afford to lose. If you're an experienced investor, make sure you're staying up to date with both technical and fundamental developments. The market is becoming more complex and more interconnected with traditional finance, which means that understanding macroeconomic trends is becoming just as important as understanding blockchain technology. For those of you who are interested in the longer-term outlook, I think it's worth considering the structural changes we're seeing. The establishment of Bitcoin ETFs, the potential for staking ETFs, the creation of a US strategic Bitcoin reserve, and the general shift toward regulatory clarity all suggest that crypto is becoming a permanent part of the global financial system. But remember, past performance doesn't guarantee future results, and the crypto market has a way of humbling even the most confident analysts. Stay informed, stay diversified, and never invest based on FOMO or fear. As we wrap up today's analysis, I want to remind everyone that this is a rapidly evolving situation. The data and analysis I've shared today is based on information available as of June 3rd, 2025, and things can change quickly in the crypto space. Make sure you're following reliable news sources, doing your own research, and consulting with financial advisors if you're making significant investment decisions. If you found today's analysis helpful, please give this video a thumbs up and subscribe to the channel. We're working hard to provide you with comprehensive, unbiased analysis of the crypto markets, and your support really helps us continue doing this work. Also, let me know in the comments what topics you'd like us to cover in future episodes. Are you more interested in technical analysis, fundamental analysis, regulatory developments, or specific cryptocurrencies? Thanks for watching Boni's Life, and I'll see you in the next episode. Until then, stay safe, stay informed, and remember that in crypto, the only constant is change. Peace out.